Good morning traders, and welcome to this week's weekly market analysis, Monday the 27th of April. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Alright, let's do a little recap of what happened last week and what's on our radar for this particular week. We'll start off with our Aussie dollar. It traded at a very narrow range, less than 80 pips per day, and essentially, in fact, for the entire week, it only went up by 25 pips, finishing at 63.90. ASX 200 ranged in contrary to our Aussie dollar from 5500 to 50.85 and finished the week down at 5300. That's our ASX 200. WTI spot oil was the chaotic one of the bunch for the week. We had a massive drop Monday, Tuesday of around about $10 per barrel, only to stabilize for the back part of the week, finishing out at around about $8. What will be interesting is to see whereabouts it will open this morning when the market gets going. Gold jumped from 1678 to 1727 for the week as investors took to the precious metal, and it was in demand and continued to go up in that uptrend that I showed you at one point last week through the daily call. This week we have a lot of data coming out, so it promises to be a more volatile week than last week. We have three central banks to deliver rates decision, that is Japan, the US and the ECB. We also have GDP figures coming out from the US and the Eurozone, and one of the other major datas to come out this week is China PMIs, which of course affects us locally here in Australia. Of course, it's also earnings week, so we have companies such as Apple, Amazon, Microsoft and so forth all reporting their earnings. So let's see what does to the Dow Jones, and in fact how it affects the stock market and our own ASX 200. Alright, let me now move into our technical analysis for the week. Let me bring my charts up and let's start the process. We'll start off and kick off with the Aussie US dollar. Alright, now if you remember last week I threw down a few markers just so that I can remember what my thought process is. The first one is this line over here that I've marked in just to remind me that the market previously to the big drop had been supportive at that level, which was roughly at around about the 66.70, 66.80 level. Once we did break down, we saw the first bit of evidence when it tried to shoot back up that now it was resistive, and so I need to mark that on my charts. The other line that I've got down here is this one that I've drawn. Excuse that my line's not perfectly, it's a bit difficult to control my mouse, but what I'm interested in right now is, as it stands now, when I'm at the time of this recording, the market this morning on Monday has not opened as yet, so I don't know what Monday morning candle is going to be, but as it stands right now there is an inside candle there, so depending on where we open we may get an opportunity to straight away shoot down as such, but we do need to wait and see where it opens. If in fact the new candle that opens already breaks that high, that would make the trade that I just showed you void. Now if that was to happen and the market continues to push in this direction as such, well then at that point what I'd like to do is essentially just remove this line, so just basically, and I just draw another one right there, focus to see what happens at that level. If we get through that level, well then I will go back and focus on that one there. So we need to be aware of the different scenarios that we may face so that we can adjust our trading plan or our trading strategy as we go along. Now remember, We're not in the business of predicting the market. We're just trying to set up traps along the way, and let's see if the market comes to one of our traps and it sets up, well, then that's what we're looking for. That'll give us the highest probability of a successful trade. Okay, so there you have it. That is our Aussie dollar for this week. Let's move along, and I'm going to jump over to my Euro USD. By the way, all the charts that I'm showing you, I'm on a daily time frame unless I specifically tell you otherwise, and you can just check that corner over there. That will tell you I'm on a daily, and I'm on a Euro USD in this particular case. Alright, now this particular chart, as you can see, I've marked this level here already. Now, before this week that just took place, we were trading into this narrow triangle, a converging triangle, where basically the market was getting narrower and narrower and narrower, and as we can see, we did break, and it's broken in the downward direction. So I didn't take that trade. It was a little bit too volatile. It's not particularly a trade that I trade often, but nevertheless it was the best thing that I could see. So what I'm now doing, because it broke on the downward side, typically, if I just let me just draw it back up, what we could expect with this type of trade is that it could come back to this level here. Okay, so I'll mark it out, and I'll be very keen to look if I do get any kind of price action reversal occurring on this possible support. It's not a support yet until it actually bounces back, but if I do get a price action reversal occurring in this section, then I would definitely be interested in taking a trade in this direction. Okay, this is the best thing that I can see for the Euro USD this week, so there's nothing else here. I'll leave it at that, and let's move along. Okay, this is the US yen. Again, I'm on a daily time scale. Now, with this one, you can see the level that I have an interest in, and there's a pattern occurring here that I've seen many times. I like to call it the bouncing ball off the table pattern, and it's, if you could imagine that this is your table over here, and a ball comes, bounces up, and every time it bounces less and less until it basically falls off the table. I can see this pattern occurring here. You can see this is the first one, the second one, that looks like the third one. Let's see what happens if we do another one there and then it just shoots down, or in fact we may get to shoot down straight away here as such. That is the most likely scenario to occur. How you could set this up is you would really be looking for a nice break-in bearish candle. So I'm talking about a candle that looks like this, very little wicks on either side. Of course, it will be a red candle. I'm just using a blue marker here so everybody can see easily. And then if you do get a candle as such, when it closes at the open of the very next candle, that's how you trade the break-in candle. So this looks very much like the bouncing ball off the table setup. Keep an eye on it. If you don't want to participate in it, at least monitor it, and let's see if it actually plays out for us. Alright, so I've left my marker there on my chart, so the next time I look at this, I will be able to see if in fact it did play out or not. Alright, so there you have it, US yen. Let me move along to the pound US. Let's say this is the cable. Now you can see here that I'm trying to draw in a channel. Okay, I've already started the channel there. Now so far I've got 2 touches down the bottom. Okay, so until I get 2 touches at the top, it's not really a channel. I'm anticipating that there could be a channel, but I'm interested in watching it. So what I will be looking for this particular week is to see if the market can push back up towards this level if we do reach this level, okay, and in anticipation that it is a channel, if I do get price action reversal occurring here, I will be more than happy to attempt to trade the market back down. Okay, so that is what I'm looking for. The markets have been volatile. We could easily make this distance up in a week. Let's see what this week plays out for us. Alright, so GBPUSD, that's what I like. I'm just going to start to monitor this channel. Let's see if it can actually play out for us. USCAD. Okay, the USCAD is a strange one. It's a little bit different. I can see there's a little bit of congestion through this region here. Alright, so where I feel like the market, I'll just use a different color so that we don't get mixed up. Feels like the market could trade in that region as such. So that's what I mean by congestion. Let me just get rid of this particular box because it's annoying me. What I have done is I've drawn in a line there. Now I don't actually like that, so what I'm going to do is I'm just going to redraw because I actually feel congestion feels better than any trend. So what I'm going to do is I'm just going to put a marker top and bottom as such, and what I'm going to be looking for is every time the market approaches the fringes, alright, if the market comes down there, every time we approach, I'll be looking for price action reversal to see if I can trade up until we move away from that congestion. Alright, so this particular one here is actually a really good example. As you saw when I showed you my chart, I was actually looking for something else, but when I came and saw it again now with fresh eyes, whatever I was looking for before, I couldn't see it. So I've altered the plan, and this is the most likely thing that I can see on this particular chart. Alright, that's the USCAD. Let's move along. Okay, so that makes sense now. The Kiwi dollar is very, very similar. Let me go back. That's the USCAD, and this is the Kiwi dollar. So they're very, very similar. We can see that I've got some kind of congestion in there. So my game plan for the Kiwi dollar is very similar to what I just explained for the USCAD. Every time that I approach these fringes, I'm going to be looking to trade back in towards the center, and I'm happy to continue to do that until we leave that area of congestion. Okay, alright, so that one was pretty straightforward. Oil. This is the one that I've had the most emails about, the most questions about. Oil's going crazy. Also had many questions about the way oil is priced. Okay, so obviously with Admiral Markets we offer a futures contract of oil if you're trading via the MT5 platform. If you're trading via the MT4 platform, you have access to the spot oil price. What I'm showing you here on my screen is the spot oil price. Now the spot oil, essentially it's a price which is it's a manufactured, or it's an artificial price based on different futures contracts. Okay, now this might be a highly complex, in fact it is a highly complex calculation on how it's done, and different brokers spot price may differ a little bit, and it's simply because their calculation is off a different contract price to what another broker's contract price is at. The most important thing to notice is how the charts are moving in the same way, and it gives you an idea of that the movement in oil itself is true. Also, don't forget, I'm looking at WTI oil. There's also Brent oil. Those are the two most heavily traded ones and available for retail clients to have access to. Now, this particular week, we saw Monday, Tuesday, two big candles drop in, and then all of a sudden, very, very, very narrow trading, disrupted markets, high spreads, overnight financing was very, very high. It's just a very extremely volatile market at the moment. If you are a beginner or not an experienced person or someone who really hasn't traded oil before, I suggest watch it from the sidelines, or if you do feel that you want to participate, well then please make sure that you choose your sizings on your trades very carefully. I would say go place a couple of demo trades first so that you understand the movement before you do anything on that live account. Okay, now what can I see here? I've got this area marked out. I still keep coming back to it. There is a gap in the market, and I know that the market wants to push back up there. Now, there's so many things going against oil at the moment. Fundamentally, the OPEC meetings, the crisis, coronavirus situation, the low demand for the oil itself. So to be honest, I can't see that gap filling anytime soon, but I still mark it out. I always do, because I like to reference where I am on any chart. Now, for this particular chart that I'm looking at right now, if anything, this looks more like a little upside down flagpole, which basically indicates more movement towards the downside. So to be honest, this one is too volatile. I'm not going to touch it. There's nothing clear for me to say, hey, let's take this trade. So I'm just going to leave this one alone, but I've just commented on oil, what my thoughts are, what I can see. Please be careful with this particular trading instrument in these present times. Okay, there you have it. That's oil. Let's move it along. Have a look at our ASX 200. Alright, this one, it feels like it wants to go into some kind of a wedge and move up slowly. This is what I see. Now, to make up this big drop that we did may take some time to do that. This particular week for any index traders, it is earnings reporting week in the US. So that means, you know, your Amazons, your Googles, your Microsoft, Apple, they're all reporting their earnings, their profits. We can't imagine that they're going to be fantastic. So it will have some kind of an impact on the Dow Jones index, which ultimately has an impact on our own index as well, the Aussie 200. For this particular week, I'm staying away from the Aussie 200. There is nothing really there that is clear cut for me to trade anyway, so I'm happy to leave this one alone. Alright, final one for the week before we wrap it up. Gold. Now, if you remember last week, go back and watch the video if you need to recheck. I was looking at this particular candle over here, and I said I was looking for trend continuation, and I was trying to catch price action reversal to continue to trade up. Now, the market did go up, but unfortunately, I didn't get a setup. So these candles here did not give me the setups that I was looking for. It is unfortunate. The market did go where we wanted it to go, but we didn't get a trigger or an entry. I did get a couple of you email me telling me that you were on gold for different reasons. Well done to you guys. We did not get an official trigger into gold. Okay, now what I have done today is I've marked this top level. I'm just interested to see if we can break through that. If we can, let me just alter my chart a little bit. Okay, so if we can break through that, it could suggest another pullback and then further continuation, but we have to keep breaking highs for that to continue. So that's why I've marked it, and let's see if it does, and we'll just monitor gold at the moment. It feels like it's in trend, but I'm at a spot where I don't like to take the trade. I like to take it as it pulls back down, look for the price action, and then continue in that direction as such. All right, so there you have it. That is gold for this week. All right, I think that's for our technical analysis for the week. Let me just quickly have a look at what's coming up today on Monday. We've actually got no major news scheduled for today. Just keep watching the daily call, which is Tuesday through to Thursday. The Monday session, I'm doing the longer full analysis, which I'm calling the weekly market analysis, as I've just covered through. If you do guys have any questions, please let me know. Always happy to answer them for you. You can always follow me on Twitter at ChatFX, trade setups, breaking news, and most importantly, hope you all have a fantastic trading week. I'll speak to you tomorrow for the daily call. Bye for now.